Nifty is near an all-time high, but your portfolio is red. Sounds familiar? In 2025, India is witnessing one of the biggest disconnects between the headline index and real investor experience. The Nifty keeps making headlines, but many retail investors open their portfolio and see red everywhere. So, what's really going on? In this video, we will break down why Nifty is at record highs while portfolios are hurting, what history teaches us about mid and small cap cycles, and most importantly, a clear, calm, no nonsense game plan for 2026 and beyond. This is going to be a bit long video with lot of data driven insights and lessons. Watch till the end. Hey there, I am Palani, a technologist turned investor and an early retiree. I share my experiences from 20 plus years of investing in US and in India. Please note that I am not a financial advisor. This is not a buy or sell recommendation. Do your own research before investing. Without further ado, let us jump right in. So, why is portfolio red when Nifty is at highs? To understand this disconnect, first we need to be very clear about one thing. Nifty 50 does not represent the broader Indian stock market the way S&P 500 or Russell 2000 does in US. 2025 rally in India has been extremely narrow. Small set of mega cap stocks in financials, autos, energy and PSU, select PSUs have driven Nifty 50 to 26,000 plus. Just think of 10 stocks. Bajaj Finance 48.3% up, Shriram Finance 65.76% up, Maruti up by 52%, Reliance Industries up by 29%. Meanwhile, the broader market has badly lagged. Here is a reality check. 70 to 75% of Nifty 500 stocks are still 10% or more below their all-time high. Many small cap stocks are 50% or more below their peaks. Yes, index is strong, but the broader market or most individual stocks are not. Two key reasons for poor portfolio performance in Indian market. One, the retail investor bias. One of the biggest reasons portfolios are underperforming is asset allocation. Retail investors in India are heavily tilted towards mid and small caps. After the massive rally in 2023 and 24, valuations in small and mid caps became stretched. In 2025, the market simply reset those excesses. By late 2025, Nifty small cap 100 is down roughly 7% year to date, whereas Nifty 50 is still up around 10 to 11%. The gap explains why portfolios feel so painful. Second, macro and liquidity shocks. The pain did not stop there with the valuation correction. Early 2025 saw risk of global sell-off triggered by surprise US tariff actions. Between Jan and March 2025, Nifty 50 fell by 12%. In the same time, Nifty Midcap 150 dropped by massive 20%. Nifty Small Cap plunged by 26%. Add to that, FIIs were rotating capital into large cap as safety net, and then heavy IPO activity sucking liquidity from existing stocks. As a result, retail heavy segments got hit the hardest. Now let's look at 10-year data from 2015 to 2025 to understand the market trends and patterns. Before building our plan for 2026, we must understand market pattern. I have compiled annual performance of Nifty 50, Nifty Midcap 150 and Small Cap 250 for last 10 years. So, what are key observations from this data? First, Nifty 50 delivered positive returns in almost every year except 2015. Nifty has much lower volatility and drawdowns. This shows the stability of large and mega caps. Second, mid and small caps extremely cyclical and volatile. Big rallies followed by sharp corrections. Now, let us look at the cyclical returns and corrections in small and mid caps. In 2017, mid and small caps were up 40 to 60%. Very next year in 2018, there was brutal correction. Come to 2020 and 21, again massive 20 to 60% return. Very next year in 2022, small caps were down 10 to 15%. Come to 23-24, massive return and significant correction in 2025. This pattern repeats. The lesson: entering mid and small caps when valuations are high leads to pain. Exiting them completely means missing future growth. Over long periods, mid and small caps have delivered 5 to 10% higher than Nifty, but brutal drawdowns along the way. That's the price of higher returns. So, what is the game plan for 2026 and beyond? Now, let's move from diagnosis to action. Here is a simple 5-step framework to win long term in the market. Step 1: accept the index is not your portfolio. Nifty 50 in 2025 is held by a few heavyweights. This is not a broad bull market yet. Understand what kind of risk you are actually running into. Step 2: rebalance gradually, no panic selling or FOMO buying. Rebalancing should happen over 6 to 12 months period, not an emotional move. Investors can fine-tune portfolio based on their risk appetite as shown in the example. Again, this is a broader framework, not a recommendation. Individual needs could be different. Conservative investors can hold up to 70 to 80% in Nifty 50 or large caps, 20 to 30% in small and mid caps with a high ROCE. Moderate risk investors can hold up to 50 to 60% in large caps, 40 to 50% mid and small caps with a high ROCE. On the other hand, aggressive investors can limit large caps to 30 to 40% and go up to 40 to 60% in small and mid caps. Step 3: shift from 1 year to 5 to 10 year view. Thinking about 10-year data clearly shows 7 to 10 year holding periods have very low probability of negative returns, especially for diversified portfolios. Think of 2025 as a reboot year, a reset that improves future expected returns. Step 4: have a clear 2026 action plan. For long-term investors, continue SIPs in Nifty 50, Nifty 500, flexi cap funds, stagger investments into quality mid and small cap with a high ROCE, avoid leveraged or governance weak stories. For stock pickers, build a watch list of 20 to 30 high quality companies, accumulate during corrections, not rallies. Step 5: habits behavior is the real edge. 2025 exposed the real enemy, which is retail investors' behavior. Investors chased small caps after huge rallies and panicked after the first serious correction. Remember this: in 2030, 5 years from now, the winners will likely be investors who used 2025's pain to rebalance wisely and invest with long-term mindset. I'd love to hear your comments and feedback. If you found value, don't forget to hit like and subscribe to Compound and Grow. Thanks for checking in. Happy holidays and wishing you all amazing 2026. See you.